Hey everybody, this is RC Peck, and this is my 323rd episode of my weekend podcast. And the theme for this weekend's podcast is Europe, the final countdown. Now, if you're not familiar with the glam band of the 80s, the Europe glam band of the 80s, you now know what the five of them look like. This was a Swedish rock band that was started in 1979 and sold about 23 million albums worldwide. And I think they had 2 top 20 songs for the US. But, you know, this was one of their album covers, and I kind of think this is what's going on in Europe right now. It's kind of the final countdown for Europe. And the first price chart I want to show you is a weekly price chart going back all the way to about mid-2002. So we're looking at a lot of data here for the European stock market. Now, the actual ticker symbol I'm using is EZU, but what you're looking at is the European stock market. And I put in 2 lines, a downtrending line here from the high of 2007 connected to the high of 2014. And then down here, the low of 2003 kind of broke through the low of 2009, the low of 2012, and the low of 2016. And what my eyes see is a market that doesn't know what to do. It is confused, right? And we're talking about the largest economic bloc on this planet. There is no bigger economic bloc on this planet than Europe. Most wars start in Europe. A lot of people condensed to not a lot of space, a lot of different cultures. Everyone's connected by land, so there's not oceans between these countries. And when I look at this, I see confusion. I see an economic bloc or a part of the world that doesn't quite know if the future, is it getting better? Yeah, it is getting better. No, it's getting worse. No, it's getting better. No, it's getting worse. Wait, I don't know if it's getting better or worse. And that's what we see here. Now, this little part right here is literally 2016, and I'll zoom in a second. But when your brain looks at that and knows that this is, in this case, let's say it's hundreds of millions of Europeans voting, but there's also other people on the planet that are voting with their dollars and their yuans and their yens, saying whether they think Europe is getting better or worse. But this is the actual result of the collective consciousness of everyone looking at the European situation and saying, okay, I don't really know. And whenever you see a price chart that looks like this, that's what the price chart is telling you. It's telling you there's confusion. So that was the first price chart, or the first of the 2 I wanted to show you. The second one is a zoomed in, it's a zoomed in part of this chart, so let me get to that. Now this one is just showing you a little over 2 years of data. The thing that's of most interest to me is 2 things. First, this is the 200-day moving average. It peaked in 2014 and has been falling. It's stabilized and then is falling again, so we could see it stabilize again. But the thing that stands out the most is actually what you don't see on here. And what you don't see on here is the $750 billion worth, or the $750 billion worth of money printing that Mario Draghi did. Now that happened right through here. So clearly printing $750 billion worth, clearly, as you look at this price chart, did not help. Now, look, today the European stock market is up about 3.5%. You never, ever want to see a stock market that is this big be up 3.5% in a day, because that means there is a lot of instability, there's a lot of confusion, there's a lot of manic buying and depressive buying, and that's what we got today. But I look at this and go, okay, so Mario Draghi printed $750 trillion worth, and what you got was the European stock market falling. So what does he do? Well, I guess we just didn't print enough. So now he's going to print $1 trillion over the next 12 months, because since 750 billion didn't work, let's increase it by 33%, because that probably will do it. Now, in addition to that, he lowered rates to banks. So when banks want to give their excess reserves to the European Central Bank, they have dropped the rate into negative territory. They've also dropped the rate what they will loan money to banks for if they actually want to loan it to people. The problem is people and businesses don't want loans right now. They want to know that their future is secure, and it's not happening. So with these two price charts, what they tell me is there's a lot of concern in the European market. And yes, guys, look, I get it. This was a huge move for Friday, 3.5%-ish as kind of as a continent or an economic bloc. Of course, that's important. The problem is we've seen a lot of these moves, a lot of these moves, a lot of these moves, a lot of these moves. Now, is this it? Is this the last move? Of course, I don't know. But the fact that it only moved up after Mario said, I'll print a trillion euro in this case, we'll see if the follow-through is there. Because when he said he'd print 60 billion euro a month, or the equivalent of about $750 billion a year, the market did respond and it went up for a little bit, but then things just really didn't get better and the market fell. So what we have here is the largest economic bloc on the planet not doing well, even with negative interest rates to banks, and money printing the size that we haven't seen since Ben Bernanke was printing $1 trillion a year. So what's the takeaway? There's a couple takeaways. The first is Europe's not really responding to these negative rates. Now, could it kick in? Is there some latency? Of course. They could start kicking in, and they can just make rates even lower. Now, I believe Mario said we probably won't have to change rates again. Very interesting. Thank you, Mario. You must know more than the rest of us. You've been wrong so far for the past 4 years, but maybe you're right now. So the first thing is Europe is not responding to negative interest rates. And think about this. If you're going to put your money in the bank, now your deposits are not in a negative interest rate environment yet in Europe, but that could be, to come. But think about this. If you were going to get negative interest rates in your savings account, why don't you just hold euros at home where it's liquid and you don't have negative interest rates? I mean, I probably would. The second thing is Europe is not responding to the trillions of dollars in printing or the trillions of euros in printing. It's not really responding to that. And it's been long enough, so we'll see if increasing the money printing 33% is the result that Europe's actually been waiting for. And then lastly, I don't think the country needs cheap loans. I should say it's not the country. The region probably doesn't need cheap loans. What they need is to eliminate all that debt, restructure their business model, possibly kick some people out of the euro. I'm not an economist. I don't pretend to be one. But based on those two charts I showed you, especially the one that goes back to 2002, your brain can clearly see that what the European Central Bank has been doing has not worked. Hey guys, this is just another step in helping you protect your portfolio and protect your future. Until next week, this is RC Peck.